Hello everyone, welcome back to our weekly webinar series. My name is Faiza Hashmi. I am the tax director here at Press Cooper. The topic of today that we will be discussing is the base price that will be used to calculate excise tax. So we are continuing our webinars on excise duty. We have been for the last 2 weeks discussing excise duty, excise tax. And in the first webinar, we had discussed the general provision relating to the excise tax. And then we are now specifically targeting various provisions and discussing things more in detail. So in the last week webinar, we had discussed about what are the excisable product, what are the product that the UAE government has, deemed as excisable goods on which excise duty needs to be paid. We had discussed this in detail that, what categories are there, what is included in those categories, how to classify correctly, and if you're having a confusion of which category to classify on and what the tools or the methods you can use. So if you guys have missed those webinars, so we would recommend that you can go see them on our YouTube channel. The handle is Chris Cooper. Today specifically, we will be focusing on the excise tax base price. So the base price is the price on which the excise tax is basically calculated. And before we come to the main topic, I would like to share some slides and recap some of the top things that we discussed in the last two lectures, so that the people who have joined us now and have not had not seen the last two webinar can follow this webinar as well. So just to recap it very lightly, excise tax is an indirect tax. So like VAT, it is an indirect tax. But unlike VAT, that's where the similarities for excise tax and VAT end, because VAT is a transaction-based tax and excise tax is not a transaction-based tax. It is applied only once in the supply chain, unlike VAT, which is applied throughout the supply chain. It is also not applied at the time the taxable supplies are made. Like VAT, it is applied at the time the goods are ready for consumption. So that means when the goods are produced, the goods are imported. So excise tax is not applied at the time when the goods are sold. It is applied at the time when the goods are imported into the UAE, or they are produced in the UAE, or they leave the designated zone. So that is also one of the difference between the two. So excise tax specifically is levied on only certain goods. So under the law, we had discussed in the last webinar that there are certain goods that are specifically deemed as harmful, and that those are the ones that excise tax have been applied on, and they are considered as excisable good because they have adverse effect on the human health and on the environment. And government uses this excise duty, excise tax to reduce the consumption of those harmful products. So this in turn help them in lowering the effect on the public healthcare system. So, example, some of the excise goods that we have discussed, excisable good like tobacco, like sweetened drinks, so excessive sugar and intake of that can cause diabetes. Tobacco products can cause different types of cancers. So, to reduce the consumption for that, so the government has made the excise duty, applied on those goods so that the consumer will be deterred in using them. You will also notice, like unlike VAT, the excise tax duty rates are very high, and that is also because of this reason that here the government is trying to encourage the consumer to choose those products which don't have the excise duty because they are not harmful products in place of those which are deemed as harmful. So that is why a very high rate of excise duty, 100% or 50% is applied on it, unlike VAT, which is 5% at the moment. Then we had also discussed that who are the people who need to pay this excise tax. So, but not only pay, but they need to get themselves registered as well. So, importer of the excise good, if anybody is importing any excise good for consumption in the UAE, producing or manufacturing any excise good, if they are the stockpiler of the excise good, or they are the warehouse keeper where the goods are stored in the designated zones. So there is no threshold for registration, as we discussed in our last webinar as well. For like VAT has a threshold that if your taxable supply exceeds 375,000, you need to register. For excise tax. There is no threshold. If you are a producer or importer or stockpiler, you need to register. The only exception they have given is for importer who is not a regular importer. So when they say regular importer, they mean that they imports are less than once in 6 months, or less than 4 in 24 months. So if you are importing once a year, you will not be counted as a regular importer, and you do not need to register. You still need to pay the excise duty, but you don't need to register for that. But the rest, otherwise, if you're a regular importer, producer, manufacturer, or stockpiler, you do need to register. And if you have intention of manufacturing also within 30 days, you need to register. Now, what is the time when this excise duty needs to be paid? So for importer, it is the time of the import when the goods are imported into the UAE. For producer, it is at the time of production. Like we said, the excise duty is not paid at the time of sales. So that is why the importer pays it when they are importing the goods. The producer pays it when they are doing the production or the manufacturing of the goods. The stockpiler, they need to pay it at the date of acquisition of the goods or the effective date of law when the products became, subject to excise, whichever is later, they need to pay on that. And for the warehouse keeper, it is when the goods are leaving the designated zone for free circulation into the UAE. Like we said before, that when they are ready for consumption, for free circulation, then this excise tax needs to be paid, and we don't have to wait for the sales. In the last webinar, we discussed what the products were. So the products, the excisable product at the moment in UAE that are considered for excise duty are carbonated drinks, energy drinks, tobacco and tobacco products, electronic smoking devices and tool, liquid which are used in the electronic smoking devices and tools, sweetened drinks, and there are different rates we had discussed that are associated with that category. So carbonated drink and sweetened drink, they are 50% at the moment, and energy drinks, tobacco and tobacco products, electronic smoking devices and tools, and the liquid which are used in these smoking devices and tools, they are 100% at the moment. So the more harmful the product, the higher the excise duty rate has been put in it. So we had also discussed in the last webinar that these are the categories. This is the rate. And then what is included in those categories? So we had discussed that carbonated drink, the aerated beverages, sparkling water is not included in it if it is unflavored. We discussed that alcohol-based drinks are not included in the carbonated drinks. Then for energy drinks, we had discussed that if the drinks are marketed as energy drinks and they can be in concentrate or gel form or in a powder form, and they don't have to be in liquid form for carbonated energy or sweetened drink. For tobacco products, we had discussed that those products that are under Schedule 24 of the GCC Common Custom Tariff as tobacco and tobacco products, those are the products for excise duty as well. That includes like cigars, cigarette rags, and many others. Then the electronic smoking devices and the liquid which are used in that, we discussed that those that are coming in the HS code of the custom, those are the same that are used for excise duty as well. For sweetened drinks, we had discussed that if the drinks have any of the sugars or the artificial sweeteners which are mentioned in the standard 148 of GCC Standardization Organization or in the standard for sweeteners under the heading of the standard 995, then those are, if that is part of the ingredient of the drinks, then they are considered as sweetened drink. But certain drinks with like, that are considered as baby food or medical drinks or dietary, special dietary drinks, or those drinks that contain more than 75% milk or milk-based substitutes. So those are not considered as sweetened drink. Again, alcohol-based drinks are also not considered as sweetened drinks. We had also discussed that, once you have categorized, you need to correctly characterize the good because that is what the excise duty, will be applied on it. And if there's any confusion between what category to choose, for example, between carbonated or energy drink, you need to look at the website of the manufacturer or the importer. You need to look at the label of the drink. You need to see that if the drink is advertising as an energy drink, which is giving energy boost, or it is talking only about taste. So these different things you need to do to characterize those the correct category. Now the excise tax law also says that if you still have confusion, then you need to categorize your product into the higher excise tax duty category. Meaning, if you have confusion between carbonated drink or energy drink, you need to categorize it as energy drink because has a higher duty of 100% as opposed to 50% of carbonated drink. Now, between carbonated drink and sweetened drink, they can be similar as well. And since they both have the same rate, the law has clarified that then you need to, classify that carbonated drink if you are not able to differentiate between the both. So now let's come to our current topic where we are talking about the price. So the first thing that we said is that we need to identify that the excisable, that the products you have are excisable product. We have to classify them correctly, which is required. So we know what is the correct excise rate for them since there's different excise rate for different product. Then we need to establish the base price. And this base price needs to be accurately, established so that this is the price on which the excise duty rate will be applied. So there are multiple approaches for computing this excise price. The methodology depends on what is the type of excisable goods that are being evaluated. We will discuss more in detail in the slides. Now, excise tax is calculated as a percentage of excise price of the good. Like we said, that the excise tax is a percentage-based duty that has to be applied on the tax base. So we need to determine what the tax base is. So excise price and tax base is the same. So the excise price of the good, the tax base, that is before excise tax is calculated because that is on what we apply the excise tax rate on. So as per the excise tax law, that excise tax base is the higher of the price which is stated in the list published by the FTA, the excise good list of the FTA, or the designated retail sales price of the good. So now the price which is stated in the list published by the FTA, we had discussed this in the last webinar as well, that if you go to your Emara Tax portal in the other services, you can see that the excise good list is mentioned there. This excise good list contains all the products that are there currently in the excise, in the FTA excise good. It is a very detailed list. It will give you all the information. What is the GTIN of the product? You can identify the product with HS custom code with the GTIN. Product description is there, item description, brand name is there, and the excise price is there. So this is the excise price which the law is saying that you need to see that is it higher of this price which is mentioned in this FT excise good list. So if you want to know what is the price in the FT excise good list, you can go to the Martex portal under this excise good list and search the product to see that what is the excise price currently there. So coming back, we need to compare this price which is mentioned in this FT excise good list for the same product and see if that is higher or if the designated retail sale price is higher. Less any excise tax already included in that price because this excise good list of FTA that is mentioned there is without the excise tax rate. So it is the base price is mentioned there. So to have it being compared to same, we need to exclude any excise tax which is in the designated retail sale price so we can compare the two and see which is higher. Now, what is the designated retail sale price? So the lawyer said the designated retail price is whichever is higher of either the recommended selling price. Now, recommended selling price is the price which is fixed by the importer or the producer. So that is what they consider as the retail price of that product. That is what it should be, sold at. So that is the price the importer or the producer of the good has said that this is the price that ideally the product should be sold at. And that or the average retail price. So what is the average retail price? So it could be that, the recommended selling price is something different, but the average retail price might be different. Why? Because it could be that, certain retailers are selling the same product at different price. So you might find the same product in Spinneys, let's say, at a higher price, maybe at Union Corp at a different price. So that is why we need to compare the recommended selling price of the retailer and what is actually being happening in the market, what's actually being sold by the retailers in the market, take out the average of that and then compare the two, whichever is higher of the two, that needs to be compared with this FTA excise good list. Now, we already discussed that excise good, the FTA excise good list is the one that is available in the Martex portal. You can check what is the price there for the product. Now we need to calculate the designated retail price. Now the manufacturer, importer, they will know the recommended selling price, but they need to now calculate the average retail price. So that is what we will discuss now. So now in order to calculate this average retail price, so the average retail price and the recommended selling price can be compared to see which is higher. There are different steps that is given under the law. So now the first step is that we need to identify the different prices the excise goods have been sold for in the market during the last 12 months. So the excise good that you have, we need to check that in the market, the retailers, what price have they been selling that in during the last 12 months. So let's take an example, product X, it's a sweetened drink. It is sold in the market at different prices. For example, in one of the retailers is being sold at 80-20. Another place it is being sold as AED 22, and another place it is being sold at AED 25. So during the last year, so let's assume that these are the three prices right now in the market that the product is being sold for in the last year. Now, the step two is that we need to exclude any excise tax from this price. Now, for the sake of simplicity, let's assume that these prices do not have the excise tax at the moment. So we'll take the same for now, that these are the price without the excise tax. But if the excise tax was in these prices, it needs to be excluded from it. So the price can be arrived, so we can arrive at the tax exclusive selling price. Then the next step that we have is that for each different selling price in the previous 12 months, we need to identify the total quantity of excise goods sold at that price and multiply the quantity sold by the selling price to calculate a market revenue figure for that price, for that period, for that 1 year. Then we need to add the results of this calculation together for each price to arrive at the total market revenue for excise good over the 12-month period. So let's take this example. In the same example, the different selling price in the previous 12 months, we had identified in the step one that the price for product X for A, B, and C, it is 20, 22, and 25. So these are the different selling price in the last 12 months at retailer where these are being sold at. Now we need to see the second, identify the total quantity of the excise goods sold at that price. So they have identified, the manufacturer identified that the price on that it was being sold for 20, the total quantity of the excise goods or the SKUs sold at 20 was 1,000. For 22, when the price where it was sold at 22, so there were 700 quantity of the product was sold. 500 quantity of the product was sold when the price was sold at 25. So now we need to multiply both of them. So for the period and then add them to come at the result of what is the total market revenue over the 12-month period. So in our example, the total market revenue over the 12-month period is 47,980. Now, moving on to step four, we need to divide this total market revenue by the total number of the excise goods sold during the period. So in our example, the excise goods sold during the period at 20 was 1,000, 22 was 700, 25 was 500. So if you add them up, it's 2,200. So this is, we need to divide the total market price, which came out as 47,900 by this total number of the products which was sold, and this will give us the average tax base. So our average tax base in this example, it comes out to 21.77. Now, this figure we need to multiply by an appropriate tax rate, which means for that category. So if ours is a sweetened drink, so the appropriate tax rate, like we discussed before, for sweetened category is 50%. So we need to then calculate what is the excise tax on it. So on 2177, if you multiply it by the excise tax rate, which is applicable on sweetened drink 50%, so the excise tax come out as 10.88. Now this excise tax we will add it to the tax base, and that will give you the average retail selling price. So the 2177, which was the average tax base, and that added to the excise duty that we calculated in the previous step in step 5 of 10.88. So we will add them together to give us the average retail selling price. So this method of calculating the average retail selling price is normally it's very easy in the sense that it's not very complicated. The only issue and the difficulty which you will face is to identify the average retail selling price, what is the different prices on which it is being sold in the market, because for a lot of the manufacturers or importers, they are importing a lot of SKUs, and those SKUs, for example, you can imagine that if somebody is importing a carbonated drink, so the carbonated drink could come in let's say a 250 ml package, in a container. It could also come in a 500 ml container. So it could have different flavors, and then different mls and different type of products, flavors, diet. So because of that, it is difficult to then calculate for so many SKUs, and that what is the price in the market to arrive at this average retail selling price. So once you have that, the rest of the calculation is simple enough. Now, when we are doing this average retail selling price, you need to also consider that the actual price, we need to consider actual price which is being paid by the final consumer, one that is being sold in Spinneys or Choitram, which the final consumer can go and get. we cannot consider, we need to exclude, like if you are selling to the hotel or hotel is selling to the end consumer, it would be a different price because that is not the normal price for the end users, or what you are selling to wholesaler corporate clients, at discounted price. Now, before we had mentioned that there are different methods. So, for example, for concentrate, we had said that the sweetened drink, the energy drinks, and the carbonated drinks, they can come in a liquid form or they can come in a concentrate, powder, gel, or extract form as well. So when it comes in a concentrate, powder, gel, or extract form where it needs to be added with an aerating agent to, at the point of sale at the retail, with the retailer, adds it together to make the drink. So for that, a different method needs to be used because, the importer and the producer, they will not be able to identify that what price the retailer would sell the final beverage for. So for that case, the law said that the whatever the price is set by the importer or the producer for excise tax, before giving any discounts or offers, before applying those offers or discount, that would be considered as the designated retail sale price for the excise good. For tobacco, in the guide, they have said that the price in the FTA good list should not be below AD 0.4 per cigarette or AD 0.1 per gram of water pipe tobacco, ready to use tobacco, or similar tobacco products. Now, let's take an example. Product Y, the carbonated drink, it has a price of AD 8.25 on the FTA excise good list. It has a price of AD 8 is the recommended selling price, and AD 7.75 is the average retail selling price. So now, as we discussed in the previous slides, that first we need to compare the designated retail price and the FTA excise price. So what would be the designated retail price? It will be higher of the recommended selling price or the average retail selling price. So first we need to compare the two. So first we will see what is the recommended selling price. So in our example, the recommended selling price is 87.75. We need to compare it to the average retail selling price. So the average retail selling price, how we had seen in the example before, how we need to calculate it by seeing the different prices, what is the different quantity of products sold at that price, and then dividing it, and then coming at the tax. So in that case, that is how the average retail selling price was calculated. So in our example, that is 7.75. So if you compare the two, the recommended selling price is higher. So we need to choose that. So designated retail sale price in our case would be 8. Now, to see the tax base, what is the excise tax base, we need to compare the higher of the excise good list and what is the designated retail price. So now, higher of the excise good list, in the excise good list right now, it is 8.25 in our example, and designated retail selling price we have chosen as 8 since that is higher of the average retail selling price and the recommended selling price. So from both of these, the higher is the FTA excise good list price, which is 8.25. So that is our excise base. So on that excise base, we will apply 50% since it is a carbonated drink, and that is the excise duty applicable to carbonated drinks. Once you apply that, so 4.13 comes out as the excise tax duty, and the price after excise tax would be 12.38. Then you also need to apply VAT on it, and then that after application of the VAT, addition of the VAT, then you will come to the shelf price. So this is the price which the retailer will be selling it to the consumer, where the consumer can go get this product at the retailers. Now, we were discussing the FTA excise good list, and how we discussed before that when we are making any declaration, for example, importer has to make an import declaration, manufacturer, producer has to make a production declaration, stockpiler has to make a stockpiler declaration. So in this declaration, when you are making this declaration, the price which is on the FTA excise good list, that gets automatically populated there. So now there can be two cases. One could be that the product that you are wanting to import or produce, that is not there on the FTA excise good list. Or it could be that it is there in the excise good list, but the price right now on the FTA excise good list, which is reflected, is not the one which is in the market reality. So in the market is different because of different fluctuations or different reasons. The price might have changed. So you can make change in the FTA excise good list, the standard list which is being maintained by FTA. Now the cases could be the new product has come in, like I said, or it could be where there is a evidence that there is a market fluctuation or price needs to be reduced, because like I said, that when the goods are automatically populated, if your good is not in the excise good list, it will not pop up there. So if it's a new product, you need to get it added. Okay, and if it's not a new product and already excise good price is there, so the FTA will not let you amend it, meaning that you can only put in the higher price, which could be the selling the selling price that you need to compare with the FTA excise good list, but you cannot go lower than that. So if you want to not pay, or you think the price in the FTA excise good list is not, realistic as per the market condition, then you can apply for a price amendment to FTA to get this, change it amended. And also it is on onus on the taxpayer, you can say the manufacturer, importer, to have a right price in the FTA excise good list, because FTA is not the one who will update the price. You need to update the price in the excise good list if it is not, matching to the actual reality in the market. Now, a request to have the product added or amended, it can be made with the FTA, like I said, to request to add a new product. So now there are different ways how you can do this. So if you want to add a new product, that a form can be submitted via product registration portal branding, which is accessed via a link from the FTA ePort services portal. So if you see, so there is a brand sync portal which basically is catering to is they link with FTA, where they verify the applications that are given for new product registration. So for a new product, you need to go through this brand thing. You can go through your FTA excise portal, which is the Martex portal. It will take you here. If you look at the portal, if you see there's a new request mentioned in the bottom. If you click to that, then it will ask you, do you want to add a new product? If you want to add a new product, it will take you to this brand sync to register, and then you need to register your products here. If in case you want to amend the price, then you need to go again here for new request and a price amendment. A person will come there. You need to click on that, and a price amendment form has to be filled so that you can amend the price for the product. So you need to give some support for that also. Now we discussed in the last webinar also, and I think we might have one webinar for this brand sync portal, because in the brand sync portal you need to put to add a new product. A lot of details need to be given. So about the product, what is the variant, what is the function, who's the manufacturer, what is the category. There is a category for image, so you need to give about the what is the image for the product, packaging, marketing. There's a portion for nutritional value, for ingredients. So everything has to be given. How much, salt is there, sugar is there in percentage. What is the nutritional value? So a lot of detail has to be given about the products which the brand sing, checks before it submits it to the FDA. It will ask you for, resubmissions if, for example, they need require more proof or more things. But specifically, if we talk about price, so for price, you need to give, the retailer receipts there. So, for example, you want to change the price, amend the price of the product. So, you will have to give FTA reason of why you're doing that. For example, you can lower the price of the product in the standard list, or, increase it, but you need to give the reason for that, and you need to, give retailer receipts as proof for that. So, if, for example, the product is being, retailed at big retailers, there's a list given, which includes Shwetram, Lulu, Carrefour, Spinneys, Almaya, the Union Corp, the Abu Dhabi Corp, Sharjah Corp. So those, if they are being traded there, then you need to provide three retailer receipts from different retailers, and they should be valid, within 3 months, and not very old receipts. And if you are the product is being retailed at other retailers than that, then you need to give as a proof 5 retailer receipts for that. Like we said that for you can go for price amendment, only for price amendment through this portal, and it will ask you to fill a price amendment form. This price amendment form also again they will ask you what is the reason that you want to change it. Will ask you for retailer receipts. When you are adding a new product in the brand sync portal, so you will have to give the retailer receipts if they are basically the first time being imported into the UAE, you can say, or manufactured in the UAE, you can give the retailer receipts from the GCC region. in that case, or if it is a new product, then you need to mark it as new product if it does not have any retailer receipts anywhere if it is new. So it's a very detailed, procedure to register any brand or any product, you can say SKU, into the brand sync. But once the product is registered here in the brand sync, then you can, control if the image is being changed or if the ingredients are changed, digital values change, pricing is changed. You can go through this portal as well. So that would be very helpful in that case. So that's it for today. And we today we have specifically discussed about just the price, what is the base price, what you need to compare. And in our, I think in the next webinar, we will continue a bit more on this excise tax. So if you, I would recommend that if you have not seen today's webinar as well, or the previous one, so it would be good if you are watching this on the YouTube channel to see all the webinars together, and so that you can follow the next webinars, which will be discussing things more in detail. As always, if you have any questions, so we are available. Mahar is there. I'm there. This is our team for tax. So any one of them you can contact for any questions that you have relating to excise tax, corporate tax, VAT. Our email is info@crestcooper.com. You can email us here or call us at 971433914888. We are here to help you for that. So that's it for today. I don't think there are any questions. So if there are no questions, so I will close the webinar. Thank you for joining us and have a good day.
Thanks for watching the video. Click on the bell and subscribe to the YouTube channel.